G'day, Jono here with our investment market summary for August, and hoping that you're all doing well, and certainly if you're stuck in the same four walls as all Victorians certainly feel like they've been for the last month. I hope you're surviving and that your mental health is all okay, and that we're on the downhill stretch now for only a few more weeks to go. Maybe actually it's pertinent to start on a positive note, which is, like it or not, we're in a pretty fortunate situation here in Australia, even in Victoria, that we live here, and that we're coming into the warmer months now, and that we have a degree of population density that's a lot lighter than other parts of the world. And I think that there will be a return to not normality, but certainly a quicker return to social mobility here in Australia than that which they'll see in the Northern Hemisphere, which I'll touch base on in a minute. And so, as I say, I'm looking at the light at the end of the tunnel here now, with a couple more weeks to go. But I do think track and testing here in Australia is very good, and that we will be able to go about our daily business to some degree in summer here. So that's a positive. Certainly in the Northern Hemisphere, we've started to see an uptick in case numbers in Europe, in Asia, ex-China, but also in the United States, which really haven't fallen. And that's a point of concern, I think, as we go into the cooler months, as schools go back. And I think that whilst populations around the world are really reluctant to be locked up again, it won't matter whether there's any formal tightening in quarantine. I think as we go into the cooler weather and infection and mortality rates rise in the Northern Hemisphere, that people will stick to themselves anyway, and that we'll see a pretty subdued end to the year from an economic standpoint. So you've got to remember 80% of world GDP is done in the Northern Hemisphere. So it's hard to be overly optimistic there. In terms of things that we've seen, I mean, the currency remains strong here in Australia, just short of 72 cents. I think in the near term, it's probably reaching a bit of a peak. I think that we will see a bounce in the US dollar into the end of the year. But I think that the trend on the Aussie dollar is higher, in large part, again, because of our ability to handle the virus, and also too, our government's ability to handle the virus too, with a lot more fiscal firepower than they've got in other parts of the world. And again, our trade balance has been excellent because China has rebounded as well as it has. So again, iron ore prices $120 a tonne are terrific. Next bit of news, I think, on the Australian side that maybe people will pay attention to will be the delayed budget figures, which are due in October. And it's likely that we'll get some middle income tax cuts coming through there, which, will be a positive. In market terms and portfolio terms, we're in the middle of reporting season now. So we've had results out from all the major banks, BHP, CSL. It hasn't been a stellar reporting season by any stretch. A lot of companies still refusing to give guidance for obvious reasons. BHP and Rio numbers were kind of okay. CSL's guidance actually was a little bit light on. The pandemic is impacting their ability to collect blood plasma, and given that is the feedstock for all their high margin hemophilia and immunoglobulin products, there is a risk there that they might struggle in the next couple of years on revenue. So modest downgrades, but the stock hasn't reacted. Like all the healthcare stocks and all the big tech names here and abroad, these things are all trading on record valuations at the moment, and on recovered earnings as well. So there's not a lot of value there. In terms of broader portfolios, as I say, the risk from my standpoint is just the concentration that's now occurred in market performance. So, the big tech names are now a quarter of the S&P. They're almost 2/3 of NASDAQ when you include Tesla and Nvidia and Netflix alongside the FANG stocks. And that's a lot of concentration and a lot of winners on very high valuations, going into an election where one of the key tenets of the competing candidate is regulating big tech a little tighter. We've got insider selling that's now back up as high as it was in February. Valuation's very high, and the economy, as I say, still down 5 or 6% on last year, and coming into winter, I feel like a broken record, but I mean, there is increasing reason for caution, and that's the way we continue to be positioned. As I say, I want to end it on a positive note. I really think that we're about to come out the other side here in Australia, which is a great thing. and I hope that you're all hopefully able to enjoy the better weather soon. Thanks.